The US and China are having some issues. So if you're an owner of NVIDIA, be really careful because China's kind of kicking NVIDIA out. And the fact that they're doing that is a little bit burdensome because that does affect NVIDIA's massive, massive earnings power and their market domination. NVIDIA is such a beautiful stock that it's almost what they call priced to perfection, which means that if any little thing goes wrong, NVIDIA is going to drop like a brick. And so you may want to, do some protections, maybe get some puts or sell off some shares or whatever. I just realized today, or not today, this week, that I have too much NVIDIA in my portfolio. NVIDIA was one of those stocks I bought it when it was like $8 or $9 a share, and I bought a decent number of shares, several hundred shares, and then that investment that was like $5,000 or something turned into $110,000. And so honestly, I probably need to sell off some of my Nvidia anyway. But just keep that in mind. So as U.S. trade tensions kind of increase and the Americans go back and forth with the Chinese, this could get ugly because what happens in these trade wars is you get this tick for tack. So you have the Chinese that say we don't want Nvidia chips here anyway. Well, you know that Trump's going to respond to the Chinese, and you know that that's just going to make things worse. So overall, I don't know where this thing is going between the U.S. and China, but one of the things that many experts are saying is that you really want to be thoughtful and careful about how you invest in China. That may not be the safest place to put your money. So the big thing to kind of know for sure is that there is an expectation that the Federal Reserve is going to lower interest rates again in October. I think in October and November or October and December or something like that. If anything changes, like if the inflation numbers come out bad, the Federal Reserve may change their mind. That could cause a collapse in stock prices. Part of the reason that the Russell 2000, the small cap and small stock index, went up so much is because when the Fed cut interest rates, that basically is a big boost to those smaller companies that are leaning on bank loans and stuff like that in order to survive. So the reverse would be true in the other direction. If the Fed decides not to lower interest rates, then a lot of those stocks would be instantaneously cooked. However, if you're a long-term investor, which everybody really should be, you can buy and hold, or you can, stick with your original thesis, keep buying, and make a lot of money that way. There's also a really interesting conversation happening right now in crypto. What they're trying to do is really fascinating. They want to tokenize like every asset out here, right? And what tokenization does is a little bit like what you also would call securitization. You're basically taking this asset and you're chopping it into pieces and letting people buy tokens that represent ownership in the underlying asset. Tokenization is a little more efficient than having securities because the stock market is only open from 9:30 to 4 p.m. I'm all for tokenization and crypto involvement because crypto markets you can trade 24 hours a day. You have constant liquidity. Also, don't forget that the reason I tell you guys that the most important thing you can have financially is a capital base. A capital base matters more than a college degree. A capital base matters more than a good job. A capital base matters more than good credit. Because if you have a capital base, you don't need a college degree. If you have a capital base, you don't need a good job. Your money can work for you. If you have a capital base, you don't need good credit because you can borrow against the assets that you own. So one of the things that tokenization will do is, and this is the argument that was made, and I kind of agree with this, is that it will allow you to like use your tokens as collateral if you want to go get a bank loan or whatever.